what I'm doing is talking about what are the big driving forces. We've just been through a federal election where everybody was talking about these sort of domestic issues. But really, I think it's the international issues that are impacting what our currency trades at, what we have as interest rates, even our asset prices, which I think most people would understand. They've seen a huge impact of foreign capital only on the upper end of the real estate market, but they certainly noticed it. I think that's typical. It's macro factors that are impacting us. I think it's minor, for example. It won't matter if there's an NDP government in Alberta or a Conservative government in Alberta. Oil prices are still right where they are, and it won't matter in our resource sector. We just had the Bank of Canada tell us very clearly that the problem in the economy is still resource sector led by oil. Other parts of the economy are faring okay to very good, like consumer spending is very good. Well, we're not going to control any of the resource pricing. That's something that happens outside our border. So it's going to be a while to transition away from at least that portion of the economy into something different. But even that transitioning, we need the U.S. to buy our exports. 75% of our exports go. So we should be watching very closely what the economic growth levels are in the U.S. That'll have a much bigger impact than what the growth level is in Saskatchewan for people in Alberta, for example. The big one we felt is in resource prices. What's happening in China has had a profound impact on whether it's aluminum or copper or nickel. The whole list is a long one because we've seen a tremendous downfall into resource pricing. Well, China's been the major reason there. I think most economists are worried about the impact of China on the overall world economy next year. So that's where I'll be looking, is what's going on in the emerging markets, but led by China. We heard a lot about jobs in the federal election, but the number one thing, if you want jobs, then you have to attract capital. People have to be willing to put their money, so again, you invest in a business, you grow the business, whatever industry we're talking about. When you analyze economic policy, doesn't matter which party put it forward, you should be asking yourself, did that create an incentive for money to come here, or did it sort of repel money? And that's going to be the key, because if you really do want to talk about jobs, you want to talk about diversifying the economy, then you've got to be talking about capital investment, because that's where it all starts. First of all, domestically, you have to look at the tax and regulatory burden. The same way we shop and we go, hey, that's on sale, we'll go there. Or many Canadians shop across the border trying to get a better deal on, for example, dairy products, which is in the news because of the Trans-Pacific trade deal. But they're getting motivated by certain things that, the pricing thing. So governments can control that. It might be in terms of a municipality, it's going to be property taxes, it's going to be zoning regulations, but payroll taxes. The list is really a long one. Governments are in our economy in a deep way, but they have to address and say, what's the cost-benefit analysis of this regulation? Are we getting enough for it? Because does it hurt us? We have to start prioritizing economic growth. And at this point, we don't. Canada, the Bank of Canada has always let us know that it's continually serial downgrades. It doesn't matter where you're looking. Right now, they're predicting 1.1% for Canada as a whole. British Columbia is better situated at this point, especially coming out of the sort of Metro Vancouver area. It's not a coincidence. That's where we've attracted capital from other regions, but also massive in-migration. People are looking at, for example, the lower end of the housing market, the entry level, and saying, look at the price rises. Well, that's because we continue to attract more people than we're building units at this point. And again, back to the previous point, that's where municipalities have to have a long look in terms of density and regulations, the cost that they add on to any new development. But the bottom line though is that Metro Vancouver is in better shape. That has some spin-offs for the rest of the province.